Hi everyone, welcome to my channel. I'm Doris. I'm here to show you about my stock account and today's market update. Today, the net asset of my account is 70,121.96. Today's PL is a gain of 0.22%. Today, Apple has closed up 1.33%. SQQQ has closed down 3.44%. SPY closed up 1.31%. United Natural Gas closed down 3.67%. Overall, the market performance today has been performing positive. Dow Jones Industrial Average closed up 0.97%. Nasdaq closed up 1.30%. And S&P 500 closed up 1.25%. Today, the tech industries and beverages closed out with a gain of more than 2%. As we all know recently that the Federal Reserve has been maintaining its interest rate as of the decision made by January. Mr. Powell kills the March rate cut. Bank of America declares that the market is now pricing the Fed, whether the Fed has made a mistake or not. Overnight, Fed Chairman Jerome Powell crushed expectations of a March rate cut, and the market quickly changed their judgment on the future path, with more than 95% of investors expecting the Fed to start cutting interest rates starting in May, with 33% believing that the Fed will cut by 50 basis points in March. Bank of America commented that both the Fed's revised meeting statement and the Powell's press conference showed that the Fed was preparing for a rate cut, but did not want to beat the market too much, so it was constantly pouring cold water on expectations of an interest rate cut in March. Bank of America noted that the market is now using rate cuts to express different views on the Fed's decisions, telling the Fed that its policy path is wrong, and seeing that the Fed missed the opportunity to cut rates in March, so the Fed's rate cut strategy could become later but faster. In their latest report, analysts like Goldman Sachs, Han Jesus, delayed their expectation for the Fed's first rate cut from March to May. But along with previous forecasts, Goldman still expects the FOMC to cut interest rates 5 times in 2024. Bank of America delayed the first rate cut until June, predicting that it'll cut 3 consecutive 25 basis points this year and another 100 basis points next year. CICC Liu Gang team said that as for the interest rate cut in March or May, the difference may not be so big from the perspective of assets. As long as the direction is clear, the transaction direction is clear, but there will be some return run in the middle. At its January meeting, the Fed poured cold water on possibility of a rate cut in March, saying the committee believes it is not appropriate to cut rates until it is more convinced that inflation is towards 2% in a sustainable way. Powell further told a press conference that the federal funds rate is likely to peak in this tightening cycle. If the economy is broadly in line with expectations, the Fed will start to adjust its policy dynamics. But he also said that, according to the meeting, the FOMC is very unlikely to reach confidence levels in March, and a March rate cut is not a benchmark scenario. Analysts say that inflation has been falling since its peaked in June 2022. And the market is generally optimistic about the return to 2%. But the Fed needs to be patient to cut rates, or because the lessons of resurgence of inflation in the 1970s remain too profound. It should be noted that the expectation of a rate cut in the months before the meeting has basically fallen below 50%, so it makes sense for the Fed to pour cold water on expectations of an interest rate cut in March, and even surprising to signal a rate cut in May. The CICC pointed out that the spontaneous market trading rate cut will bring premature loose financial conditions, which in turn will affect inflation, understanding the Fed beating the market to prevent too much behavior. But it does not mean that the possibility of interest rate cut in advance is completely ruled out. CICC believes that, from multiple dimensions, the possibility of an early rate cut is still in place. Powell, after all, has said that the rate cut into view and made a turn, and the downward trend of inflation in the first half of this year is relatively certain. We estimate that both the overall and core CPI has fallen below 3% in the second half of the year. The Fed has also set the threshold for interest rate cuts, with greater confidence that inflation will be returned to 2%. There is still 2 CPI data to be confirmed before the FOMC in March, which leaves room for policy shifts without directly ruling out the possibility of a rate cut. And non-fundamental factors such as hedging liquidity, tightening, and avoiding interference with the election will also have an impact on the Fed's choice to cut interest rates early. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.